Well, many thanks, Nifemi. Fuel distribution associations have announced plans to withdraw their services nationwide from tomorrow night, September 2025, in solidarity with NUPENG and other stakeholders if the situation remains unresolved. The group said the decision follows Dangote Petroleum Refinery's plan to import 4,000 compressed natural gas-powered trucks for direct fuel distribution to retailers. Well, this was disclosed at a joint press conference between the Natural Oil and Gas Suppliers Association of Nigeria and the Petroleum Products Retail Outlets Owners Association held in Abuja. They said Dangote's new distribution strategy could jeopardize the livelihoods of thousands of suppliers and transporters who depend on the downstream sector for survival.
What is important, let everybody do the business so that there will be alternative. If something happened to Dangote today, we'll know where to fall back. Just like what happened to all our refineries, the NNPC refinery. What happened to us? We run into trouble. Concentrate on that refinery. If you are doing the refinery work, those trucks, those distribution will distract you. And that's exactly what happened to an NNPC. And that's why we are crying that what happened to an NNPC should not happen to Dangote.
1,000 trucks will go to 4,000 stations. And how long will that take place? That is why Petron has directed that any NUPENG member that is working with all our retail outlets that joins in the strike, if the matter is not resolved tomorrow or today, will not be sacked, will not be terminated.
The governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, has reiterated the Apex Bank's commitment to macroeconomic stability, fortifying the banking sector and establishing Nigeria as a top investment destination. Mr. Cardoso said this during a fireside chat moderated by the country's chief representative of Deutsche Bank Nigeria, Andres Vos, at the European Business Chamber Eurocham Nigeria Sea-Level Forum in Lagos. The Apex Bank governor said the recapitalization for the Nigerian banks was making progress and will result in even stronger institutions that could withstand shocks and finance growth. According to him, key drivers of the renewed investors' confidence are the CBN's reforms and stabilization of the Naira, as extolled by members of the EU chambers.
There's bureaucracy that in many respects drives a lot of the way and manner in which developments take place. After 2-3 years, people, relax, and some of the bold things that they wanted to do simply don't get done. Then somebody else comes, resets it, and it has to start all over again. I see that as a major problem. The lack of continuity between different administrations. It's difficult enough in many countries. Talk less of, across boundaries. I see that as a major problem.
Experts in the country have projected Nigeria's economic growth to remain stable in 2025, citing factors such as stable exchange rate, decelerating inflation. They highlighted improved stability, growing investors' confidence, and the potential for sustainable growth are driven by reforms including fuel subsidy removal and exchange rate volatility. And now, Mr. Okoyemi Agbaje, who is the chairman of the board of the National Pension Commission, he appeared on our business flagship show Today Business Nigeria. He applauded government on these reforms and had his projections in mind.
What we've had so far shows better growth. Inflation has moderated, like I always add, both methodologically and substantively, but consistent reduction in inflation. The interest rates, MPR, has been stable. At least there are no rises. We actually think we might be due for a cut. And revenue is growing. I mean, pleasant news from the president in relation to revenue. So, and on the social side, in terms of helping the poor, helping the vulnerable, I think the main highlight has been NELFund, but now we're beginning to do things like credit, building a credit economy. Providing free technical education across federal technical colleges. So we're beginning to build up a profile of social investment program. So I think the evidence that Nigeria has stabilized and may now be due for strong recovery, I think the evidence is substantial.
Stocks rose and the dollar wobbled after the United States labor data sealed the case for an interest rate cut this month, while the yen fell as investors grilled for uncertainty in Japan following the resignation of Prime Minister Shigeru Ishiba. Gold prices held near a record high, while the U.S. Treasury yields hovered close to 5 months low after data showed the world's largest economy created far fewer jobs than expected in August, with markets factoring in chances of a jumbo rate cut. European futures advanced 0.45%, while S&P 500 futures pointed to 0.08% higher after a volatile session on Friday where the index hit a record high but then closed 0.3% lower. The yen fell across the board and was last 0.6% lower at 148.39 per dollar, while the Nikkei surged 1.8%, just shy of its recent record high. The benchmark 10-year Japanese government bond yield was flat at 1.57%. MSCI's broadest index of Asian Pacific shares outside of Japan was 0.4% higher. Hong Kong Hang Seng Index gained 0.35%. Japan's economy expanded much faster than initially estimated in the second quarter, driven by upward revisions in private consumption and inventories, giving some policymakers assurances that they navigate the political and trade uncertainty. Now, revised data from the Cabinet Office showed that gross domestic product grew 2.2% year-on-year, and it surges from 1.0%. That was announced on August 15th. The figure shows brisk growth in the world's fourth largest economy. But the U.S. tariff and growing political uncertainty could complicate policy making in the months ahead after Prime Minister Shigeru Ishiba resigned. On a quarter-on-quarter basis, GDP grew 0.5%, compared with a median forecast and the initial estimate of 0.3% rise. The Cabinet Office said the upgraded estimates reflected restaurant, game sales, and corporate spending, which was not available at the time of initial readings, released private consumption, which accounts for more than half of the Japanese economy. It inched up 0.4% versus a 0.2% uptick in the preliminary reading. The capital expenditure component of GDP, a barometer of private demand, rose 0.6% in the second quarter, revised down from 1.3% in the initial estimate. Meanwhile, German export unexpectedly fell in July as a sharp decline in U.S. demand due to tariffs, while industrial output rose from the data till the Federal Reserve's Statistics Office showed that exports from Europe's biggest economy fell 0.6% in July compared with the previous month, and the United States down 7.9%. Exports to EU countries rose by 2.5%, while goods to other countries outside the EU declined by 4.5%. Industrial production, which rose by 1.3% in July compared to the previous month. Also, industrial orders unexpectedly fell for the third straight month in July, declining 2.9% on the month. Imports fell 0.1% compared to June. Foreign trade balance showed 14.7 billion euros in July from 15.4 billion euros in June, 17.7 billion euros in July of 2024. And finally, crude oil prices gained more than 1% today, trimming some of last week's losses as the prospects of more sanctions on Russian crude after an overnight strike on Ukraine upset OPEC's Plus planned output increase. U.S. West Texas Intermediate crude rose to $62.98 with an upward price review of 1.79%. Brent up 1.77, selling for $66.66. Bonnie Light is down 2.84%, selling for $78.62. OPEC basket is up, flat, 71.32. That's $71.32 per barrel. That's business news at 7. Next.